Austin with First Coast Financial Group, and this is your market update for July of 2021. Here we are. It's the third quarter in 2021, and after a really good start to this year so far, it looks like we've kind of hit a volatile stretch here. So let's jump in and break some of that down because there's a lot going on. Overall, it seems like markets are starting to shift their tone. All through 2020, ever since COVID, it felt like anytime there was bad news hitting the market, markets actually responded really positively, because for a long time what we came to see is that bad news drives government intervention, and so stimulus, etc. And so that really pushed the markets higher. But as we were reaching new highs almost every single day through 2021, that perspective is starting to shift. We're focusing more and taking more seriously financial reports, government data, things like inflation. So right now, the consumer price index is showing quite a steep increase in inflation. But let's take a moment and break that down. Everyone is talking about this, right? Inflation. So if we break down inflation and we really look at it, what are we seeing? Are these factors permanent? Are they going to be with us for all of time? Are we going to continue to see inflation in these key areas moving forward? Or like the Federal Reserve Chairman Jerome Powell is saying, these are transitory or they're temporary. They're going to come by, but they're going to go away at some point. That is still yet to be determined. So that's why every month when these numbers are released, there's a lot of action in the market, and there's a lot of new headlines centered on inflation. The Delta variant is something that's really weighing heavily on markets right now. There's still a lot to learn about what the Delta variant is going to be like and what it's going to do. But there's a good article that was written by Yale Medicine and their team, and it seems like the key theme here is that the vaccines are holding up pretty well against the variant. And it seems like they're kind of pushing people to get vaccinated through the article ultimately. But take a look at that for yourself if you're curious. But they do ultimately say that there's still going to be time before we know exactly what's going on with the variant. People are scared. We saw the sell-off that happened when COVID hit, but the difference between last March, last April, and today is last March we had no idea what this virus was going to do to people. We had no idea if we were ever going to be able to treat it, if and when we could create a vaccine. But the point is we've got tools in our tool chest now to deal with this issue. We know more about it. So you've kind of got two camps. One camp of investors that is really scared and really trying to weigh the worst case scenario of this variant. And then you've got another camp that says, hey, yes, there are risks. Yes, this could have a pretty serious effect, but we've got the tools that we need to deal with it. So we're watching that very closely to see what is going to happen. Let's touch on seasonality. Historically, ever since 1950, the third quarter of the year is the worst for the market. So we're looking at some volatility, almost by no coincidence is it striking here in the third quarter. So we're seeing some relative weakness here. Things to think about. Let's consider how much is still sitting in money market accounts. If you take a look at this chart here, those of you watching, you can see that about $4.5 trillion almost is still sitting in money market accounts. If you remember, and if you paid close attention, ever since the sell-off in COVID, every time the market would dip for a couple days in a row, even really one bad day, it seems like there was always people waiting on the sidelines to get in and buy some of these things at a discount. And it's very possible that if we get the Delta variant situation under control, the inflation fears start to ease off a little bit, and the supply and demand big squeeze that's going on, it gets balanced out, we could see a very similar pattern moving forward. Very possible. Looking at moving into the end of the year, historically, reactionary trading is going to lose to balanced, disciplined, diversified portfolios. So, you can take a look. This chart here just shows that how much action happens after market hours. It's always pretty fascinating. So really jumping in and jumping out of the market historically has been a pretty horrible way to go about it. So staying disciplined, keeping your eye on things and making sure that you're not overextended historically seals the deal. Overall, there's going to be volatility in this market, especially with this Delta variant news. And, really one of the scariest things about the Delta variant to a lot of investors is vaccination rates. Like I touched on a moment ago, that Yale article was saying that if you're vaccinated, you're most likely going to be okay. You're probably going to be okay. Again, they're still researching everything. Still a ways to go. But the thing is I think last time I looked, only about half of the United States was vaccinated, and much less of the world as a whole was vaccinated. So on one hand, yes, we do have the tools to combat everything going on with this Delta variant, but at the same time, not everyone is using the tools, and not everyone has access to these tools. So we may see an effect from that Delta variant. Again, very, very early to tell. But as always, if you guys have questions about what's going on in the market, or if you want to go deeper on any of these subjects here that I covered today, feel free to visit our website. It's a good place to figure out how to contact us. You can schedule an appointment directly through there. The website is www.firstcoastfinancialgroup.com. Thanks so much.